In 2024, we saw some great growth stocks explode on the market, like Nvidia. Nvidia was up almost 185% last year. Palantir was up over 300%. But can we choose this needle in the haystack? No, most people have a hard trouble. I mean, veteran investors can't just pick that company that's going to explode on the market like that. I mean, even me, an average investor, I don't know which company I'm going to pick. So the easiest choice is to pick an ETF, an exchange traded fund, a fund full of different companies. So then it's not as hard as it is to pick a needle in a haystack. You just pick the entire haystack. Now today we're going to be talking about some of the best growth ETFs on the market, and two in particular. We're talking about SCHG and QQQM. Now, if you look at these two ETFs, SCHG has grown about 39% in the last year, with QQQM doing about 27 to 29%. Now, there are other great growth ETFs on the market like VUG, and Fidelity's got one too. Now, if we're thinking about some other growth type of ETFs, you can also think about VGT, but that's more technology, or SMH, which is more semiconductors. If we're looking at the broad market overall, SCHG and QQQM are two of the best growth ETFs on the market. That's what we're going to talk about today. So, which is the best? SCHG, QQQM, and my thoughts on this later. Hey guys, my name is Steve, and I run the Frugal Expat website, where we try to help people to save more, invest better, and to travel more. And today we're talking about two of the best growth ETFs on the market. That is SCHG versus QQQM. Now you may be wondering why I am using QQQM instead of QQQ. Most people have heard of QQQ, the Invesco Nasdaq 100 Index ETF. And the reason I am using QQQM is because of the expense ratio. Now they are both similar, as in they're like the same. QQQ was created in 1999 and QQQM was created in 2020. Now the difference is QQQ has an expense ratio of 0.20%, meaning it'll cost you $20 for every $10,000 invested, while QQQM has an expense ratio of 0.15%, meaning it'll cost you $15 for every $10,000 invested. Now they are basically the same exact thing. One is newer, one is older, one is cheaper, one is more expensive. The choice is yours. But for those buy and hold investors, QQQM is going to be probably the better choice because it is cheaper. For those looking to do more option trading, QQQ could be the better option. Now today we're going to be talking about these kind of interchangeably just because they have the same data, and one is newer, one is older. The older one gives a little bit more data when comparing to SCHG. Now let's break down these two ETFs. Now, let's get down to our first ETF, which is SCHG. SCHG is the Schwab Large Cap Growth ETF. It tracks the Dow Jones US Large Cap Growth Total Stock Market Index. So it is comprised of 229 different holdings. As you can see with a couple of different holdings, you have Apple, Nvidia, and Microsoft making the top three, which is about 33% of the portfolio. Now, it's got different sectors, which makes this a little bit more diverse. It's got information technology. It's got only having a little bit less than 50%. It's got communication services, consumer discretion, healthcare, and financials. Now, if we look at QQQM is a little bit different. It's got about 100 different holdings, and the holdings are Apple, Nvidia, Microsoft, Amazon, Broadcom, Tesla, which are quite similar. And the top three, Apple, Nvidia, and Microsoft, only make up about 27% of this portfolio. Almost 60% of this portfolio is made from the technology sector with consumer discretionary. There are no financials because QQQM, it does take up about the top 100 companies from the Nasdaq 100 that are non-financial. So these companies, like I said, are technology companies, plus you got companies like Costco. Now, if we look at some of the historic performances of these two ETFs, now we look at the last 5 years, we can see that QQQM has done about 140% over the last 5 years, and with SCHG has done about 140% as well. So they're almost identically, they're almost tracking kind of the same performance overall. And that's a good thing, because if you pick one or the other, you're going to end up with a great growth ETF. Now, a couple of differences, as we can see, are the expense ratios. Now, if we take a look at some of these expense ratios, we may see a difference. QQQM does have a 0.15% expense ratio. That means it is going to cost you about $15 for the first 10,000 or $1,500 over the first 1 million. Now, if you have SCHG, it is going to cost you 0.04%. That is going to be $4 for the first 10,000 or $400 for the first 1 million, as that for that first million is going to be a difference of about $1,100. That could be something you may think about or may not, but that kind of sways you a little bit. One's going to cost you less than the other, and they have identical performances. Now, if we look at the performance of the last year, as in 2024 until today is January, the last year, we can see that QQM did about 30% over the last year, which is pretty good. If you're thinking about it, you're trying to grow your money, you're getting 30%. Let's say you have $100,000, that's about an additional $30,000. Now, if you look at SCHG, on the other hand, in that 1 year, you have a growth of about 39%. So you're getting close to $40,000 for that $100,000. Now, to most people, that's going to seem like a good bit of money. I mean, if we're having an average salary of anywhere between $30,000 to $60,000 and you're getting $40,000 from your investments, that is a very good return. And you may think, oh, maybe you could retire. Well, slow down too fast. You need to build up that portfolio to get a little bit higher. But that's just a good feeling to think about, that your money has grown so much. Now, if we look at some of these other factors, now we talked about some of the sectors. Now, QQQM does have about close to 80% of their sectors in about two different things: technology and consumer discretionary, which can be quite a bit of concentration in those two sectors. And with SCHG, you have some financials, which is not in QQQM. You also have 229 different stocks. Now, QQQM does have a little bit less in Apple, Nvidia, and Microsoft, while SCHG does have a little bit more. But the sectors are a little bit different, where you have a little bit more diversification in different sectors with SCHG. Now, these two different tech ETFs, growth ETFs, are just two of the best ones. Now, if we're looking at growing our money in the long term, we need to make sure we have like a good balanced portfolio with a good broad market ETF like VOO or VTI. You may have also a good bond ETF or a good dividend ETF like SCHD or like DGRO to kind of grow those dividends, and a growth ETF like SCHG or QQQM could be those tech growth ETFs that you may add to your portfolio to add a little bit more risk while you have some stability with that dividend ETF. And if it's between you and me, SCHD could be the better ETF because it has performed a little bit better in the last year. It's got also a cheaper expense ratio. It's got a little bit more diversification than QQQM. And those are some things that we want to look at when we're thinking about volatility in the market. If the tech sector does go down, QQQM will go down a little bit lower than SCHD. And those are just some things to think about. Now, we don't just invest for yesterday. We invest for tomorrow. We don't know what's going to happen in the future. And so you got to look at some of these things, those factors, when we're looking at things. Having a little bit of financials kind of brings some stability to SCHG than QQQM. If you want a lot of technology, you could go with QQQM, or you can look at a better ETF like VGT, which has more technology. For me, in my portfolio, I have a little bit of QQQM and a little bit of VGT. I think those are just two of the ones that I kind of put money into. And right now, I mean, as I do some of this research, SCHG is a great ETF to hold. And if I was doing my research and watched this video, that would probably be my choice of the day. Now, those are just my thoughts and my opinions. Let me know down below, what is your favorite growth ETF? Could it be VUG? Could it be VGT? Could you have some SMH, or even you're a QQQ person? Those are just some thoughts and some opinions. So leave your thought and your opinion down below and let's talk about it. I'd love to hear your opinion on what is your favorite growth ETF. Until next time, we'll see you.